Well, hello, traders and investors. I'm LA Little, and this is your final weekly NeoTA wrap of the 2015 calendar year. Thanks for joining. As always, we take a look at these markets, and we do it from a neoclassical perspective. Each time, we ask ourselves what happened last week, and what might it tell us about the coming ones. I do this show every Sunday evening, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. Now, this week I'm recording a little bit early because I won't be around in the normal time that I record. I also want to give you an update on the calendar for the end of the week here. Like last week, we'll do a show Monday, Tuesday, and more than likely we'll do one Wednesday. I'll let you know before then. I will not be doing a show on Thursday. As far as what happened last week, the ending numbers, we had a nice big rally again. This is the oscillation where we go down, we go up, we go down, we go up, and we do it all over again. 3% on the Russell led the pack, S&P 208, 2.5 on the Dow roughly, and on the year, still down on 2 of the 4, barely up or basically break even on 2 of them, Dow and S&P, and the NASDAQ still leading the way on the upside. As far as where do we go from here? If we pull up the S&P 500 chart, what you're going to see is you're going to see some sort of a, if I were a classical technician, I would be drawing in something that looks like this, right, where you've got this sort of a wedge thing taking place. They could pull it back farther. I really don't pay a lot of attention to something like this. I'm much more interested in what's happening at particular price points and those price points where there's significance. For example, we have a swing point high here. We have a swing point low there. We actually have a high volume low here. So a break below here would tell me, something major or more significant is taking place. If I can get over the swing point high, that also tells me something, right? Tells me more than likely I'm going to attack these two highs and potentially get a little push to the upside. And so as we come down to the end of the year on a short-term basis, right, on the daily chart here, S&P kind of like, range trading, smaller range, but nothing big, just up and down action. It's been that way for a while. If we look at it on a weekly, you can see that up and down action very clearly here with this, oscillation that keeps taking place back and forth on these markets. So you see it there, you see it here, you see it again, on the way on the downside. Then you go all the way up and finish on the downside last week up. It's seasonally that time of the year. Odds favor another up week. Breakdown bar is the key one on the S&P 500. That's where you got to get over if you're going to take out these highs that are back here. And if you take out those highs, you could get a little push to the upside as a result. So, right now, it's just oscillation back and forth. A lot of that oscillation based on the price action associated with the dollar, the currencies. The currencies have been moving everything. And so if we want to talk about, what's coming next, we really should focus our attention on the currencies, because I believe the currencies are going to tell you what's hold up in the next turn of these markets. Here's the UUP, which is the dollar. You've got a range trade. This is on a daily chart. You got a range trade off the Draghi bar that continues to be the major positional trade at this particular point in time. It has to get over the top of this, or it has to get over the bottom of this to really get anything going. The way it's trading, it's starting to set up an ABCD structure to the downside on a short-term basis. And we're talking about this little ABCD here, that little move down. If it takes place, right, that little move down could get us beyond that range on this backside. So if I look at it just on a very short-term basis, the push down could get us under the swing point low, get us under the bottom of the Draghi range, right? Both of those could be accomplished on one move. Then, of course, you would think some sort of a bounce and potentially another move to the downside. But at this particular point in time, it looks like it's trying to head down and test that low and potentially get below it. Now, if you pull this back and put it on a weekly, right, that's where it becomes more interesting, because with the setup that's here, you essentially have two large ranges in effect. You got the one at the top and you got the one at the bottom. The move that we were just talking about on the daily charts would bring this S&P back into a test of these lows on this range. And so you would try to be breaking down off the top range into the lower range. And that lower range has a high volume low at the bottom. And so if you get in here far enough and stay in there for a little bit, you're probably going to try to head down and test that low. That move down, if it were to happen, weakness in the US dollar would cause commodities to go higher, would cause the European markets to work higher, which could also help the US markets to work higher, right? And so you could get all these things working higher off a weaker dollar as we come into the new year and as we come into the new earnings season. And so the setup here, at least right now, is that we're probably going to come into the new year trying to test the bottom of this higher range on the dollar. If you look at the markets last week, right, the moves were in the commodities. You had the spike back up in the oil market. You had the same thing taking place even in the precious metals. Nothing huge, but you had a move back up in silver. You also had a move up in the copper market off those lows from a few weeks back. So across the board here, as this dollar gets weaker, that pushes commodities up. That takes those commodity trades that have been beaten down and lifts them back up to test back into those areas that they've been hammered at previously. And I'm pulling up the XLE here, for example, to show you, a little spike up last week off that dollar weakness. Here's the XLI getting the same sort of action. If you go over to basic materials, you had the same thing there. I expect that trade, the way the currency markets are set up, to probably continue to trade that way this week, which would take these commodity trades and lift them back up on the intermediate term time frame to test back up into the recent highs here and potentially get back in to test those bearish breakdowns. So you got bearish retest regenerates on the way back up. And so that's the way it's shaping up this particular week. Those commodity trades look to me like they're probably going to try and work a little bit higher, which actually brings me into a viewer question. And that question is can we potentially put on a short position in the CXO, which is a Concho Resources. This is an old driller. What the viewer is looking at is this ABCD structure potentially that's being set up here to take this quite a bit lower. And he's looking at trying to jump this trade with that ideal in mind. Now, the thing I would note is that even on this time frame, what you have to be careful about is the retest regenerate and see if it gets back over it. Now, the viewer actually wrote me a detailed set of notes. He was thinking that what he would do is put his stop just above that, and given that that is the bearish retest regenerates top, I think that's an ideal place to put the stop. That's where you want to protect. What I would disagree on with him, and that is that more than likely you want to put that trade on as you get close. I suspect this is going to get higher than you think on this trade, and I'm not sure that this is going to stop it at that particular price point. So that trade, yeah, it's not a bad trade if you put it on high enough off that bounce. If you don't put it on high enough, then I think the risk is the risk of you getting stopped out with a decent sized loss is a little bit greater. Now, what was being looked at here, and I want to go back into the weekly chart, is that there was this wide price spread drop here, and a test into that low, right, which was where the prior test into that low was here. The test on the volume compared to the volume on this really was higher volume. So you're testing into that low with higher volume. You're also testing into the high of the low, the big wide price spread bar here from December last year, when oil really took a hit and the drillers went with it. That volume on this test was higher. Now, what it wasn't higher was on the subsequent bounce, but that bounce was a lot of short covering. So I kind of dismissed that, and I'm really trying to look at this particular bar that says, hey, this could come back down into exactly what is being expected, and that is a farther breakdown. My concern on this chart, and the reason I think you're going to get a higher bounce, is you've already done an ABCD structure to the downside. So if I draw this in, let me get it drawn in here. You have this, and then here, right, and then a more than one-to-one relationship. So I think that bounce is probably going to come deeper back up. And so if we look at that price point on this particular chart, that's 101.51. So if we take that and we go back to the daily chart, that 101.51, the top of this bar is let me grab the number there, 102.70. So 101.51, I think, up to this high 102.70. It's in that area that I'd be looking for the short trade, with a stop above the breakdown bar using an ATR as your cushion. So that's a viewer question. That's Concho Resources. Right now, I think that you're going to see commodity trade if those currencies do what I just outlined. I think you're going to see these commodity trades try to go higher yet. And so, shorting them into that strength is going to be kind of tough. So at least let it get close if you want to take that trade. So this week, not much news. End of the year, seasonally strong. Big move up on the S&P 500 last week. And let's come back to that. As these markets push back up, let's pull it to the weekly. The big trade here is to try to get it back this week to the top of this bar, 2103. I expect you're going to see this sideways to higher and try to get back up into this area. This looks to me where this market wants to try and trade. And so my expectation is somewhere up in this area is where it's going to try to trade to and hang there as we come into the new year. And then that's going to set up all the swing point highs up here to try to get tested in the new year. Or we're going to have the breakdown. Let me get it drawn in right. We're going to have the breakdown potentially from these two range trades, right? You've got this range trade and you've got that one. And the breakdown, if it's going to come, is going to be to test into and break this area that we just saw tested this past week. It's into the high of this high volume low here. That's the key bar. That price point's 1993.5. You get underneath that and you stay under it for a bar, you're going to try to get to the bottom on the weekly. And those are weekly time frames. So in other words, if you get into this for a week, you stay into it for another week, then you have to expect that it's going to try to gravitate towards the bottom. And that bottom, if we pull this back now and put it on a monthly, that bottom is going to take you all the way back down to here, 1867. The lows of October, 1820. You're not going to be that far away. That's when it gets real dangerous. So we'll have to watch those ranges carefully into the new year. That's where people should be focused. As far as this year, it looks like they're going to try to close it out on a strong note this week. And that's it for the week. I'll be with you tomorrow. Have a great one. Enjoy your holidays and take care.